Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a failure at the 70.75 to 72.75 resistance area for a directional move that took ES below the previous day's low for a test of the 57.5 to 59.5 support zone, where responsive buyers have been active here in the overnight session. So at this point, heading into the open, our bias from the overnight session is bearish. Our overall short-term bias continues to be neutral because the market is still technically trading within a balance and within a defined range. But at this point, the overnight session is clearly telling us that the sellers are dominant. Now, it doesn't mean that that can't change, and we'll have to look out for that in the underlying internals and momentum and price action. But if the market continues to hold below 61.5 to 62.5 and continues to balance around 60.75, and we are seeing broad market weakness, excess weakness on the underlying advanced decline, and the tick is holding below zero, then we could be looking at eventually a break below the 57.5 to 59.5 zone for a test of the 51 quarter to 53.75 initial support, which marks the bottom of the recent 2-week balance. And that would then be the major inflection point, and how the market responds to initial support will really help drive the short-term bias going forward. On the upside, beyond 61.5 to 62.5, we have the gap fill and the previous VPOC at 64.5, and then the initial resistance zone at 65.5 to 67.5, and that's still an area where sell side can be active. Whether we short that area or not is going to depend on the real-time momentum situation and the underlying internals. If we are starting to see strength in the other markets and we are getting some decent upside momentum, then perhaps the overnight low is going to stick, and we're just going to continue to balance within the range from yesterday, and perhaps even go back up towards the overnight high at the 70.75 to 72.75 resistance. But that area is going to be a short-term hurdle, and 65.5 to 67.5 could even be a failure point depending on how the market is setting up in real time, because like I said, the overnight session has been relatively bearish, and ES has already taken out the previous day's low. Now, yesterday was a neutral day, which tells us that there was indecision in the market, but based on the overnight session, we're seeing that the sell side won out, and if we continue to hold below 61.5, 62.5, continue to struggle at 60.75, then that 57.5 to 59.5 is not a major area of support. That can give out. We've already seen a response there, and if we continue to test that zone, then it may not hold. But in order for the market to really put in a breakdown, we are going to have to see that broad market weakness come in, and it is going to take some decent downside momentum for ES to break and go directional into the 51 quarter to 53.75 initial support. So, the overall bias continues to be neutral, mainly because over the larger time frame, if you look back over the last 2.5 weeks, the market has been stuck in a range. Yesterday's overnight session, so Sunday night session, marked a failed breakout attempt, and then yesterday was very balanced, very two-sided. So with this environment, we have to stay nimble, and we have to stay flexible on the day time frame. It means we have to be very much in tune with the real-time momentum situation. We have to make sure that if we're going against momentum, that we are securing good trade location. And even then, if it's kind of in the middle of range, we have to be more cautious with our trade management. So right now, the market is just in a very balanced state. We know that it's not going to remain in this state. We are going to get a move one way or the other. It just hasn't happened yet. And, there's no purpose in predicting when it's going to happen, because we've been stuck for 2.5 weeks and no one really even expected this. So let's just stay flexible and nimble with our short-term bias on the day time frame. Keep that neutral short-term bias in mind, and then be very attentive to how the market is setting up in real time, what the underlying internals look like, what the momentum situation looks like, and if the momentum is bearish, the internals are bearish, and the other markets are, holding their respective areas of resistance here in the overnight session, then, we're open to short setups as well. So that short-term bias means that longs and shorts are fair game, but we are going to have to read and assess the market in real time to make that decision. And if things are unclear and nothing is really setting up, then it's going to be better to wait, be patient, and stay out of the market until a good structured trade setup presents itself. So those are the main ideas heading into the open. Let's see how ES responds to the pre-market resistance, the 60.75 HVN, the pre-market support. Those are going to be the short-term areas that are going to help establish bias. From there, let's just keep an eye on the underlying environment, and we will take it from there.